In this video, I'm going to show you exactly how you could potentially have a lot of profits and maybe even become a SoFi millionaire just by utilizing this stock with a very specific set of rules. I'm going to show you exactly how you can do it, break it down, and explain how it's possible and why. And then I'm going to show you guys why SoFi is primed and ready to move in the north direction or upward direction exponentially in the coming years. Before we start on today's video, this Friday, my free masterclass webinar returns, 6 p.m. Eastern, 3 p.m. Pacific, very limited spots. You don't want to miss it. Link is in the information box below. I'll be teaching you exclusive strategies that I only taught my Discord and Elite members previously. And I'm going to show you the truth behind the stock market. I will definitely open your eyes and blow your mind. It's what every student that's ever been at the webinar before said they've learned more in that 1 hour than anywhere else. You don't want to miss it. Link in the information box below. I have a huge announcement. I'll be answering your questions at the webinar. I'm going to be going over my custom strategies that I don't teach anywhere else to show you how to gauge the market and make moves in any direction. I look forward to seeing you there. Let's dive into SoFi right now and show you guys exactly how you can make money in the stock market and specifically in SoFi. I'm going to break down SoFi and explain where I expect it to go. And we're going to go over the rules and how all of this works. There are 3 very specific rules I want to start out with first. We're going to go over these first. I'm going to show you how to gauge SoFi and how to enter and where SoFi is likely to go and when. But we have to go over the rules first. And starting at rule number 3, you have to absolutely believe in the stock and not follow any of the negatives or the positives or the hype, so to speak. People bashing the stock, people hyping it up. You have to believe in the stock for yourself and believe in the company. And in order to do that, you have to evaluate the company's growth, their potential, price to earnings, price to sales, their earnings calls, diluted EPS, how many shares float there are, the market cap, their fundamental, their overall future guidance, everything all into one, how the economy is doing. If interest rates get cut, that will positively affect SoFi. All of these things go into the stock. So you have to gauge the stock by its facts, analysis, and of course, all the technicals and fundamentals that go into a stock and understand the stock in its entirety and not just the hype or the bashing or the sentiments that you see or read online. This is very important because this is what I do when I'm investing long term and it's critical to success. And as an example, if someone says something negative about SoFi online, you don't want to be selling your position and then it runs a few weeks later, just like you don't want to believe into the hype and dollar cost average and buy the stock when it's really high if it's going to dip a little bit next week or the week after, so to speak, and you could add even cheaper. And that segues us into rule number 2, which is dollar cost averaging. This is very important. I always utilize my 33-10 rule, which is a very important rule, which I'll be teaching in the webinar this Friday. It's one of my exclusive strategies that I designed when working at a hedge fund in order to extract the most value out of a stock utilizing time. And you always want to utilize 2/3, 33-10, 3 goes into 100 3 times essentially, and you're able to dollar cost average 3 times. And I always do 2 on the dip, 1 on the up. Therefore, if the stock dips, I dollar cost average. If it dips, I dollar cost average. And if it goes up, I dollar cost average that 3rd time. And this gives you an overall average cost over time. If you're buying the stock at 10 and then at 13 and at 12 and at 13 and then at 11, you're going to have an average cost of somewhere around $11.50 to $12, which is good. And you have more shares. So when the stock runs, which essentially it's going to do, because I'm going to get into all that later on in this video, you're going to make more money because more shares is important than having less shares at a cheaper cost. 500 shares at an average cost of $6 isn't going to generate you more profit than 5,000 shares at $10 if the stock goes to 20. Makes no sense, right? So you essentially want more shares, the cheapest cost possible, obviously, but more shares, accumulating a mass amount of shares. You see, 5,000 shares at a $10 gain is $50,000. 500 shares at $14 profit, $7,000. 5,000 shares at a $10 profit is $50,000. So it's more important to dollar cost average on the down and the up to accumulate a good average price and accumulate more shares. And this is what I've done over time. I did this with Amazon. I did this with Block and Square, which is now XYZ. And I've also also done it with other stocks along the way, including Tesla in 2021, where I held for over a year dollar cost average into 2022 and sold right after it started coming down. I ended up buying puts after that, but that's for another video. I made a lot of money on Tesla, a lot of money in XYZ and Amazon, and a few other stocks that I accumulated over time, including Ford and Microsoft. And these stocks have all pretty much made me money the same way: time, dollar cost average, and accumulating my position at the right times and understanding the fundamentals and the strength of the stock. And the number one most important thing to becoming successful while investing like this over time in a stock that is a very strong growth stock like SoFi is time. You have to stay in your positions, dollar cost average. This shouldn't be something that you're looking to get into and then in 3 months get out with a 30% profit. I do teach that when you're selling puts or you're selling call options, you're buying leap options, or you're running the wheel strategy. But when you're looking to invest and make a lot of money on a stock like SoFi, this is how it's done. This is how many millionaires and billionaires became rich on Coca-Cola and on other stocks. And this is how you could do it on SoFi. I have students that have made like $400,000 or $500,000 on Palantir. They got in when it was 17 when I told them to last year and recommended it. And they bought and accumulated shares in the $20 and $30 range. And some students have thousands of shares with over $100 in profit, which is $200,000, $300,000, $400,000 in profits in less than a year. Accumulation while dollar cost averaging. But most importantly, my number one rule here is time. You don't get into SoFi. If you want to become rich on SoFi, buy thousands of shares and accumulate an average cost of say 13 and then get out at 18. You keep holding and holding. This could take 2 years or 3 years. It could take 5 years, but this is the name of the game. Rule number 2, rule number 3, and now you add it in with rule number 1, which is time. Dollar cost average, believe in the stock and the fundamentals, do your research, don't believe in the hype or the naysayers. You believe in the stock, you dollar cost average, and you keep adding to your position, and most importantly, you give it time to grow. Time is key. Every 6 months, every 3 months, every year, you keep adding to this position, and it will grow your position larger and larger over time while maintaining a good average cost. And when the stock reaches its apex, its prime spot with lots of growth, you will be able to exit at a very nice profit. But time is the key, and you have to follow these rules in order to become successful and in order to take advantage of the growth on SoFi. I'm going to go ahead and explain to you guys exactly where SoFi is likely to go. We're going to go over technical analysis. We're going to go over price to sales, price to earnings, and show you guys why SoFi is a good stock and where I see the stock going. But I also want to point out that you can sell put options in order to lower your dollar cost average. So if you want to buy 1,000 shares, you could buy 500 shares at $13, which is the current price, $13.40, I believe. And you could go a month out and sell 5 put options at $12.50. So if it dips, you get a cheaper cost, you get assigned, and you also get to collect that premium, which also gets deducted from the amount of shares that you own. So over time, with selling put options and buying shares, you can dollar cost average even better. And with my 33-10 rule, I typically buy 1,000 shares, sell 10 put options, buy 1,000 shares, sell 10 put options. And if you do that and SoFi over the next 3 or 4 months stays in between 13 and 14, you can end up with a very good dollar cost average of even sub $12, even if the stock doesn't go below 12, because you're collecting all of those premiums. And this is a way that you can lower your costs. And again, this is something I'll be teaching in the webinar this Friday. So if you're interested in learning, growing, and having profits like you see on the screen, I will be teaching this at the webinar this Friday, June 6th, 6 p.m. Eastern, 3 p.m. Pacific. Link to register is in the information box below. And I'll be showing you strategies just like this, how you can dollar cost average and utilize put options in order to get in cheaper, even if the stock doesn't get you assigned and doesn't dip below your strike price. The premiums will lower the cost overall from the shares that you purchased. Let's dive into SoFi. Let me show you where the stock is likely to go. And this is how you can grow your position and potentially become a SoFi millionaire if you have enough shares. So here we are looking at SoFi, and I use my specific strategy, my AVP strategy, which I will be teaching this Friday in the webinar. And I use this strategy to gauge the average weighted price on SoFi, and it's very accurate the way I set it up. And the average price on SoFi is between $11.50 and $14. Really between 12 and 14 is where it spends a lot of its time, usually in the $12.50 to $13 range. So it's kind of in the mid to upper of the AVP right now. So what we want to do is evaluate SoFi. Their price to earnings is 32, which is pretty decent, slightly below average, but pretty decent. But in order to gauge their potential growth for the future, we're going to go look at their financials, their trailing 12 month, which is basically $4 billion trailing 12 month. And we divide that into their market cap of 14.88 billion. So we're going to essentially do 14.88 divided by 3.89. We have a price to sales of 3.8, which is really stellar. Most stocks are between 9 and 16, and a lot of them are even higher than that. This really gives SoFi a potential to 3 to 4x minimum right now. So if they grow into their full potential where they should, and based on where stocks typically go with price to sales, then we are looking at a very real world possibility of a 4x in the next 3 to 5 years or more. Essentially, SoFi will find its way to around $50 to $60. So if you have a $50 price and then you minus 13, you're looking at $37 gain. So $1 million divided by 37 is about 27,000 shares. This is a lot. That means that you'd essentially need $250,000 of the SoFi right now. So that would be pretty difficult to do, but over time you can add to your position. And essentially with premiums, lowering your average cost due to collecting premium on the puts, it could be even cheaper. And over time, you can lower your average cost. So essentially, if you can get your average cost down to $10 times 27,000 shares, then that would be $270,000. If you were even lower in the $6 to $8 range, then you're looking at $130,000. Now, this is if SoFi only 4Xs, but potentially this is not the same thing as Bank of America. SoFi is a fintech bank with a banking charter and AI with Technisys and Galileo backing it, a very good CEO and good growth. So like Anthony Noto said in the past, numerous times, that it's not a matter of if, it's a matter of when they become one of the biggest banks in the United States. And if this happens, they could more than 4x, because Citibank is essentially at $70 or $80. PayPal has reached much higher prices than $60 or $80. And in my opinion, SoFi has the potential to pass all of them up. If SoFi was to go where I think they're going to go in the next 5 to 7 years, which is around $100, that signifies a 10x return, meaning $100,000 investment right now potentially gives you $1 million. It's very possible. And then you're not even really accounting for the put option premium that you're selling. So for example, if I buy 500 shares and sell 5 puts, buy 500 shares, sell 5 puts, even if I'm not getting assigned and end up having to buy those shares outright, if you're just selling 13,000 shares with the puts, which would be 130 contracts, which is 50% of the shares you're buying, you're selling puts along the way and collecting premium. Well, then you have 130 contracts over the course of the next several years. And if each of these contracts is worth $20, well, then you're looking at $2,600 each year that you're selling them, because I'll be selling these contracts throughout the year. So example, let's say I'm selling 5 puts per month and I'm collecting $20, 5 times $20. They're probably worth a little bit more. They're probably worth about 30, but we're doing, let's say $150 a month while we're buying the shares, and you times this by 60 months, which is 5 years, you're essentially making $9,000 in free premium. And if you do this again, if you're doubling down, you can make even more. But essentially, let's just say $10,000 over a few years of just very easy out of the money put premium, then you're looking at a lot of growth. But if we look at SoFi right now, and we look at puts going out to July 3rd, and we look at, say, the $12, $12.50, or $13 puts, we could essentially sell these puts here or these ones right here. It's going to lower our average cost, and we think SoFi is going to go up, short to midterm. So we could even go out 2 months and sell put options on August 15th, and we could sell them for $13, and we would end up collecting $1.12. And if we're selling, let's say 10 of these every couple of months at $1.15, we're buying 1,000 shares and we're selling 10 of these. You're collecting $1,100 every 2 months. So this is like going to end up being around $7,000 a year. You figure we're going to do 1143 times 6. $6,800 a year times 5 years, we're going to generate about $35,000 in premium. And this is over the course of, selling 10 put options, 1,000 shares at a time. So if we only get assigned half of that, we divide this by 2, $17,000. So if we end up buying 27,000 shares at an average cost of, say, $15, we also have to account for the premiums we just collected. So $405,000 minus $34,900, it's $370, and that's if the stock goes up and we're averaging out. And this is good, but we would not need 27,000 shares. With a 10x, we wouldn't need that many, because at a $13 or a $15 price, that's $85 gain. And if we divide $1 million by 85, we would only need about 11,000 shares. So 11,000 shares times an average cost of 15 or maybe even 14 if we sell enough puts to get in is 154,000. But then you're going to minus the 34,900 in the puts that we sold. So essentially, we really, if we play our cards right, selling puts and lowering our cost and timing it right, we can turn 100K into $1 million. And this is how you do it. This is literally how you do it. I have plenty of students that have $500,000 or $1 million. This is how you could potentially do it. Even if you only did a third of this at $35,000 or $40,000, which is just less than half, between a third and half, you could still have a $300,000 to $500,000 payout in the coming 3 to 5 years, maybe sooner, but I realistically say 3 to 5 years, maybe 6 years, but that's where I see SoFi going. I do see it sooner rather than later. So the key here is every time you buy shares, sell put options. If you want 1,000 shares, you can buy 500, sell 5 put options, or buy the 1,000 shares and sell 10 put options just far enough out of the money so you don't get assigned. But if you do, you just acquire more shares, collect the premium, and lower your cost. And if you don't, you're just collecting free premium time in, time out. And when you do this over time and not worry about making a quick dollar now or a get rich quick scheme, which is not anything I teach, you're able to grow your account the safe way, and you're able to have a really big gain in a stock like SoFi, which is a very strong growth stock. And I recommended it when it was $6. If you had put $50,000 into SoFi when it was $6, when it reached 18, you would have had over $150,000. There's already been a 3x gain in the last year. And if you utilize puts and dollar cost averaging in time and follow my rules, then you'll be able to do this. When we look at SoFi, one more important thing that I really want you guys to see is on SoFi, if we look at their financials, we can see that they have very good net income, very good EBITDA, and a very strong balance sheet. And their net debt is only $500 million, which is much better than almost any other fintech or bank or financial stock. And when we look at their cash from operation activities as well as their free cash flow, very, very healthy cash flow, very healthy balance sheet and income statement. It's all very healthy. SoFi has a very positive sentiment. 1 year, 98%. Can you imagine 3 to 5 more years? Now is the time to do it. And if you want to make money in the market, this is how you do it. You can see on the screen all the profits my students have been able to make. I made $20,000 on Microsoft. I made thousands of dollars on Wayfair, thousands of dollars on Ford. I've made over $175,000 since the beginning of March, just on strategies and taking advantage of the market's volatility, but most importantly, time in the market and getting a good average cost, as I was able to achieve massive gains on Microsoft by dollar cost averaging my leap and call options, just like my students in Discord. If you want to learn some of my exclusive Discord strategies, so if you're having trouble in the market, maybe you want to retire, maybe you're new in the market, don't know where to begin, I would love to help you. This Friday, my masterclass webinar is free and it returns this Friday, June 6th, 6 p.m. Eastern, 3 p.m. Pacific. You want to be there? The link is in the information box below. I'll be teaching exclusive strategies that I teach my Discord, my AVP strategy, my 33-10 rule, going over charting, analytics, and psychology to show you exactly why you're losing. Let me show you why you're losing, how to turn it into wins, and how to understand the market. Like I said, this Friday, links below, 6 p.m. Eastern, 3 p.m. Pacific. I look forward to seeing you there. And as far as SoFi, if you want to become a potential millionaire or make a lot of money on SoFi, follow my 3 rules in this video and understand how to long-term invest invest and forget about the noise. If you get into the stock right here and then you are getting out of the stock, let's say somewhere way up here, maybe way up here, it doesn't matter if the stock goes down, up, down, up, down, all the way down here, all the way up. Doesn't matter if it goes down here. This is all noise. You enter, dollar cost average along the way, and get out up here. It's all noise, and this is how you do it. I look forward to seeing you at the webinar this Friday. Be sure to register. Links below. Take care of yourselves, fam, and I'll see you in the webinar and the next upload.